How Warren Buffett made his first $1 million. Investing lessons for 2025. Warren Buffett, widely regarded as the most successful investor of all time, didn't just stumble into his fortune. His journey to the first $1 million was built on discipline, long-term thinking, and a razor-sharp focus on value. For aspiring investors in 2025, his path offers a treasure trove of practical lessons that are more relevant today than ever before. Let's dive into how the Oracle of Omaha earned his first million and what modern investors can learn from his playbook. The early years. A young entrepreneur with a vision. Before Buffett was buying billion-dollar stakes in blue-chip companies, he was hustling as a teenager. Born in 1930, he displayed entrepreneurial instincts early. At 6 years old, he bought packs of chewing gum and sold individual sticks for a profit. By 11, he bought his first stock, 3 shares of City Service Preferred at $38 each. When the stock dipped to $27, Buffett panicked, but it later climbed back to $40. He sold for a small gain, only to see the stock shoot up to $200 shortly after. That experience taught him the value of patience and long-term investing, lessons he would carry for life. By the time Buffett graduated from college, he had already saved around $9,800, equivalent to over $100,000 today. But it wasn't just about saving. It was about learning and practicing investment principles that would set the stage for his first million. The Graham Influence, buying cigar butts. Buffett studied under the legendary Benjamin Graham at Columbia Business School. Graham, often called the father of value investing, taught Buffett the strategy of buying undervalued stocks, companies that were trading for less than their intrinsic value. Graham called these opportunities cigar butts, companies that might be struggling but still had one last profitable puff left in them. Armed with this philosophy, Buffett began scooping up deeply undervalued stocks in the 1950s. He started small, buying companies like Geico and Sanborn Map Company. These weren't glamorous names, but they were solid businesses trading below what they were truly worth. This value investing strategy helped him generate outsized returns. One of his early wins was Geico. Buffett invested a significant portion of his savings after meeting an executive at the company. He realized that Geico had a sustainable competitive edge and growth potential. His conviction and research paid off big. The Buffett Partnerships, compounding gains. In 1956, at the age of 25, Warren Buffett started his investment partnership with just over $100, fueled by contributions from family and friends. Over the next 13 years, Buffett ran several partnerships under the umbrella Buffett Partnership Lit. He focused on high-return, low-risk investments and reinvested gains aggressively. Buffett didn't charge standard fees like most hedge funds of the time. Instead, he earned money only if the fund exceeded a 6% return. This performance-based structure aligned his interests with his investors and pushed him to outperform the market. By 1962, Buffett's net worth had hit the $1 million mark. He had turned thousands into millions not by chasing trends, but by sticking to fundamentals, investing only when he saw a margin of safety, and letting compound interest work its magic. Key investing lessons from Buffett's first million. Now that we've walked through the timeline, here are the core investing lessons from Buffett's early success and how you can apply them in 2025. 1. Start early and let compounding work for you. Buffett didn't become rich overnight. He started investing young and gave his money time to grow. The earlier you start, the more time compound interest has to multiply your gains. In 2025, the same principle applies. Whether you're investing in stocks, ETFs, or even cryptocurrencies, time is your most powerful asset. Don't wait for the perfect moment. Just start. 2. Buy businesses, not just stocks. Buffett always viewed a stock as a piece of a business. This mindset led him to analyze company fundamentals, understand business models, and invest only in companies with a sustainable edge. As flashy tech trends and meme stocks dominate headlines in 2025, remember Buffett's approach. Dig deep into the company's finances, leadership, and long-term prospects before investing. 3. Invest in what you understand. Buffett never chased what he didn't understand. He avoided the dot-com bubble, stayed cautious with crypto, and focused on businesses within his circle of competence. For investors today, this is key. Stick to industries or companies you truly understand. Don't let hype or FOMO, fear of missing out, drive your decisions. 4. Look for undervalued opportunities. Buffett made his first million by buying undervalued companies. He sought stocks trading below intrinsic value, those with solid assets, earnings, and prospects, but temporarily out of favor. In 2025, look beyond the noise. There are always undervalued gems waiting to be discovered, especially during market corrections or economic downturns. 5. Be patient and think long-term. Buffett's greatest asset isn't his intelligence, it's his temperament. He's famously said, "The stock market is designed to transfer money from the active to the patient." Short-term volatility is inevitable, especially in today's fast-paced world. Resist the urge to trade frequently. Stick with great companies, reinvest your returns, and let time do the heavy lifting. 6. Keep emotions in check. Buffett's early success was rooted in emotional discipline. He didn't panic during dips and didn't get greedy during booms. That emotional steadiness is rare and essential. In 2025, A-driven trading, 24/7's financial news, and social media can stir up anxiety and overreaction. Train yourself to stay rational. Follow a clear strategy and don't let emotions dictate your financial choices. 7. Reinvest profits to accelerate growth. One of Buffett's secrets to fast growth was reinvesting earnings. Instead of pulling out profits, he let them roll into the next opportunity. If you want your first million in today's world, reinvest your gains. Whether through drips, dividend reinvestment plans, compounding interest, or rolling investments into new ventures, reinvestment is key. Final thoughts. Your path to $1 million starts now. Warren Buffett's journey to his first $1 million wasn't flashy. It was disciplined, thoughtful, and methodical. He understood value, focused on fundamentals, and let time work in his favor. For modern investors, especially in 2025's unpredictable and rapidly evolving markets, these timeless principles are still gold. You don't need to be a genius or have millions to start. Just start smart, stay consistent, stay curious, and above all, stay patient. Buffett's first million laid the foundation for one of the greatest fortunes in history. Yours could start the same way, with one smart decision made today. Let me know in the comments section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.